Guys, today is a very special day. We're officially kicking off the earnings season. And I'm going to cover some very basic stuff that should help out anybody, whether you're a beginning trader, advanced, no matter how many years you have been trading. I'm going to cover some basic concepts. So with that said, guys, trading earnings is just like dating. Remember, the most important things about trading earnings is you don't have to marry them. Just date them for a little while. So, and sometimes when we're dating, it's all about expectations. And believe it or not, low expectations are actually very good at certain times. Let me tell you a little story. So a few days ago, I have a few friends that are like into online dating, right? And so I have a good friend, and he's all excited. This girl he's found online, he's like, oh man, I got a hot date today. I'm just like, he's all excited. I'm like, okay, go for it, man. So he showed me the picture, and he's like, dude, check out this picture. I'm looking at the picture. I'm like, wow, buddy, that is a nice picture. So he goes at 7 p.m. He goes on a date. 15 minutes later, knock on the door. I'm like, I'm opening the door. He's back. I'm like, dude, did you forget something? What's going on? He's like, man, you're not going to believe this shit. I mean, remember the picture I showed you? So, like, I show up, and instead of the beauty, I get the beast. So I run the hell out of there as soon as I can. So this would be an example, guys, of when somebody sets really high expectations, and when it comes down to it, oh boy, they let you down. They really do. So how does that apply to earnings, you may be thinking, Leonardo? Another crazy story of yours here. Well, with earnings, it's the same way. Sometimes we have very high expectations for the company, and they may be announcing earnings, and they are good, but they're just not as good as you expected them to be, or in this particular case, as institutional investors actually expected earnings to be. And in this case, you may be a beginner trader, and you may be thinking, well, hold on a second, I want to buy the stock. I want to buy the options because the earnings are good. And then you're sitting scratching your head like, why is this stock dropping? Well, because the expectations that were set for a company were so high that even the good earnings were not good enough. It's just like my friend was showing me a picture of a prom queen, and when he showed up, okay, it was the beast. And in this particular cases, the stock will seriously sell off. Now, the most important thing to recognize is the second aspect. And by the way, hey guys, try this out. I mean, this really works. Now, I personally do not like or do any kind of online dating, but I know some of my friends tried it and it really works. I personally prefer to just meet people in person. So try this. If you're a guy and you're dating online, here's a quick trading tip for you, right? Go out there through your phone, whatever, and find absolutely the ugliest picture you can find of yourself, like where you complete total slob, out of shape, just looking as ugly as possible. So find one of those pictures. I'm sure if you dig through all the pictures you got, you can do that. Then post that picture on the online dating site, okay? And here's what's gonna happen. All the girls that are looking for the pictures, I'd be like, man, this dude right here, he's ugly as hell. Why on earth would he be putting such an ugly picture out there of himself? And then it gets them thinking, well, he must be really confident to put an ugly picture of himself like that. He must just not care. He must not be even trying to impress me. Or they may be thinking, oh my God, he must have a big 11-inch, you know what I mean? So they get curious. They call you. You go date them. And then you show up, and they're like, hold on a second. This guy, he ain't ugly looking at all. He's actually pretty decent looking. So now, Can you imagine how smoothly your day is actually gonna be? Just because you've lowered the expectations. So how does that apply to earnings? We're going to talk a specific example of Priceline, or ticker, what is now known as BKNG. It used to be PCLN. So its management is known to give very ugly guidance no matter of how good the current quarter actually is. And by doing so, it continuously sets the expectations of the market participants extremely low. So when it does announce a quarter that is actually mediocre or decent, the response is typically very positive and the stock moves higher. Now, guys, that you understand the basics, that it's all about the expectations, I'm going to break this down a little bit further. There's typically, when companies announce earnings, there's three very important things that you should be taking a measurement of. Number one is earnings per share. And again, it's not about whether the company is reporting good earnings per share or not. Everything is on relative basis. In other words, institutional investors, they will compare this earnings per share number to the previous quarter. They will compare this earnings per share number to the same quarter last year. Okay? So in comparison basis analysis, they will make a decision whether what they were expecting about earnings per share, whether this is going to be good or not, as far as the idea of continuing to purchase the stock in the future. Now, the second thing they're going to evaluate is the sales number, or also known the revenue number. And that as well will be compared to the prior earnings quarter and the same quarter the prior year. And the most important thing to understand about earnings is the guidance. It's not about where something is now when it comes to terms of stock trading or options trading. It's about where something is actually going. So if you understand that, you're going to do extremely well this earnings season. Guidance is when the company is actually making projections about how well or poor their earnings per share is going to be, or how great or poor their sales or revenue number is going to be in the next quarter. So oftentimes you will see situations where the company reports earnings and the earnings per share is good and the revenue number is good, and it may be right around the area where everyone has expecting that number to be, but the stock drops. And again, you may be sitting there scratching your head thinking, why? Well, it's because the guidance number about the next quarter was not what institutional investors were expecting. So remember, out of the earnings per share, the revenue or the sales number, the most important number is the guidance number for the next quarter. So now let's talk about the next most important thing when it comes to trading earnings. It's about the expectations of the guidance. And the greatest part, guys, going into this earnings season, and tomorrow we're going to have officially the first company that is of importance announcing earnings, is Citigroup. So typically earnings will start with earnings announcement from the financial companies. Goldman Sachs, Citigroup, Bank of America, all of these companies will be announcing earnings this week. The most important thing is they're actually setting the tone of what institutional investors are going to be doing, at least for the first few weeks of the earnings season. So our goal as a trader, do you remember earlier in the video I said you don't have to marry these trades, just date them for a little while. And what I really mean by that is you have to figure out the initial reaction to how institutional investors are reacting to this company's earnings. Remember, oftentimes the initial reaction is not going to be your true reaction. So if you see some stocks actually dropping, they are going to come in and buy the dip and move these stocks higher over the course of the next few days after they report earnings. In some instances, the initial reaction could be higher, and then you'll see the stocks dropping and reversing the next day over the course of the next couple of days after they report the earnings number. So your goal is not to fall in love with the earnings, but rather to observe the institutional reaction to the earnings report. Your opinion about whether the quarter is good or bad or whatever you may be thinking is absolutely irrelevant. The only thing that is relevant is how will institutional investors react to the earnings numbers in the guidance number. The most important thing to understand is there's certain institutional behavior that you will observe going into earnings. In other words, sometimes you will see that the company will be announcing earnings in 3 days, and institutions will continuously buy it into the earnings, thinking that the earnings numbers are going to be exceptionally great. But if they are just great, not exceptionally great, what do you think is going to happen? The stock is going to sell off. So when you're making these weekly trades, these short-term trades, we're not talking about investing your money here for the next 5 or 10 years. When you're making these day trades, when you're making these swing trades for the duration of 24 to 72 hours, it is important to understand and observe the institutional behavior going into the earnings report. Oftentimes, I'm just going to give you a statistic that I pay very close attention to. If the company goes higher 3 days before the earnings announcement, the probability that it's going to run even higher after the earnings announcement is diminished. Now, the probability is more likely 62 to 38, meaning there is a 62% that the company will reverse and 38% that the company will actually move higher. So for that reason, you don't really get an edge or a competitive advantage of any sort buying the earnings reports ahead of the earnings announcement. The best strategy you can utilize is to actually wait till the earnings are announced, observe the institutional behavior, reaction to the earnings report, and then actually go in and place in the trade at that point. By doing so, you will also accomplish a few very critical factors that will help you make money. Number one, you're not going to be paying or overpaying a significantly huge premium that the market is going to dictate going into the earnings report. Remember, one of the key rules you want to follow is buy low, sell high. Well, it is impossible to buy options low because the premiums are artificially inflated going into the earnings report. So by buying high, the only strategy you're left with is selling higher. That is exactly the opposite of buying low, selling higher. That actually gives you a lower probability. So for that reason, you don't want to risk, you don't want to buy a ton of contracts going and keeping them overnight, because most of the companies, they do announce earnings after hours, after the markets close, or before pre-market, before the markets open. So you're not going to be able to sell your options until the market opens, and oftentimes that is not going to be a profitable endeavor. So this is one of those situations where your patience, again, really pays off. So we've covered the three key things, guys: the earnings per share, the sales revenue number. We've covered the guidance, which is the most important thing. And so if you're new, you may be sitting there thinking right now, well, you know, I have this company that I heard about, a lot of great stuff that they were talking about in the news, and I really want to buy calls. And guys, based off what I said, you should not be doing that. Because again, it's not about whether you believe that the company is going to have a great earnings report or not. It's about how institutional investors are going to react to that earnings report. And so the best strategy going into this week is wait for the reaction. The predominant institutional behavior right now is buying the dip. So if you see a great company reporting great earnings, it makes sense to wait for the initial reaction lower, and that's when you want to come in, and that's when you want to buy calls. Now guys, I'm trying to explain everything in very basic, very simple terms. But the main point I'm trying to make out of everything right now, every earnings season is different. And we're going into this earnings season where expectations overall for the companies are extremely, extremely low. So with that said, the companies have a very high probability of actually beating the expectations. So this is one of those scenarios where you're dating online and you're putting your ugliest picture out there, and when you're actually showing up in person, you're not as ugly as you've set the expectations to be. So remember, in these cases, things actually go rather smoothly, and overall, for that reason, we're expecting the market to continuously make future highs over the next few weeks. Guys, I hope this information was helpful. If you have any questions, we have a 6-hour proprietary course that talks much more about a lot more details, trading earnings correlations, how to figure out your best entries, how to make sense and actually place trades in the same sector based off the company's report, but not buying the calls or puts on the company that's reporting, but understanding which company is actually going to make a move based on the other company making the move that is reporting earnings. So this is actually where some golden gems are hidden during the earnings season, and if you understand how to hunt for them, you will have a phenomenal earnings season. Guys, I invite you to click the links below and check out Trade Like a Rockstar course so you can have a record-setting earnings season. With that said, guys, I'll catch you on the next trade.